To accurately project Bitcoin's next massive $10,000 macro move, you have to look outside the blockchain entirely. Right now, there is a severe contradiction in the market. On-chain, cryptocurrency is displaying localized weakness and struggling against long-term resistance. Yet traditional equities are moving with aggressive, unyielding upward momentum. The S&P 500 has pushed to within exactly 2% of its historic all-time high. This sustained traditional equity tailwind is so powerful that it is actively overriding the established long-term bearish indicators across the entire crypto ecosystem. Welcome to Whale Radar. Subscribe for institutional-grade market intelligence. To understand price action today, sophisticated market participants must temporarily abandon pure on-chain analysis. The capital flow dictating Bitcoin's daily movements requires mapping the exact institutional liquidity zones targeted by this equity surge. This chart shows the primary macro warning sign. On the weekly time frame, Bitcoin maintains a massive historical bearish divergence, confirmed by a persistent red supertrend line. But a surging S&P 500 creates a direct correlation spike, violently pushing crypto prices higher. This specific dynamic creates absolute timeframe subordination. The immediate gravity of localized liquidity nullifies long-term structural trends, forcing the market to respond to today's capital flows rather than yesterday's historical patterns. We can map this localized gravity by analyzing the specific defensive floors and upside targets for Bitcoin, Ethereum, and Solana. In a market driven by conflicting timeframes, trading success relies entirely on tracking where institutions are hunting liquidity, rather than drawing flat support lines on a weekly chart. This terminal view isolates the S&P 500's performance from its local lows. Since bottoming out, the index has rallied a measured 8 to 9%. There is a source of short-term friction. The 4-hour relative strength index is currently approaching overbought territory. An overbought RSI on a 4-hour chart implies minor localized volatility or a brief cooling-off period. It does not signal an impending structural crash. As long as the S&P 500 maintains its broader upward trajectory, it functions as a systemic tailwind. It actively pulls capital into high-beta ecosystems, including digital assets. A perfect one-to-one daily correlation between equities and crypto is a myth. However, the macro trajectory of the S&P 500 is undeniable. It is the primary engine driving crypto asset prices today. Applying that macroeconomic catalyst to Bitcoin reveals an active price discovery zone defined by strict liquidity boundaries. This 3D map illustrates the critical lower boundary currently defended by institutions. There is a dense block of defensive liquidity positioned directly between $70,800 and $71,000. Multiple successive bounces have validated this exact zone as a structural floor. Buyers are actively stepping in to prevent a breakdown below 70.8K. Directly overhead sits the immediate upside target. A highly vulnerable cluster of liquidity is densely packed right at $73,800. Propelled by the broader S&P tailwind, market makers are actively pushing price action upward to hunt and trigger this specific liquidity cluster. Bitcoin's immediate micro-moves are calculated sweeps of upside liquidity engineered directly by traditional market momentum. Zooming out on the Bitcoin chart reveals the macroeconomic roadblock looming directly above these micro-liquidity sweeps. This heavy resistance block stretches from $72,000 up to $76,000. This band has historically acted as a massive supply zone, repeatedly repelling bullish breakouts over the last several months. The absolute ceiling of this block, $76,000, functions as the ultimate binary threshold for the entire cryptocurrency market. Overcoming this resistance requires strict technical confirmation. The market needs a full 3-day candlestick close and hold definitively above 76,000. If that structural roadblock is shattered, the order book thins out significantly, making $86,000 to $87,000 the next objective target. Price action below 76,000 remains localized liquidity hunting. Exceeding that level represents a transition into a new macroeconomic regime. As Bitcoin actively executes these critical liquidity sweeps, the broader crypto ecosystem reacts sequentially, absorbing the new overflow capital. For the past 6 months, Bitcoin dominance has been trapped in a massive sideways range. This indicates a heavily synchronized market where capital is rising evenly, rather than Bitcoin absorbing all liquidity for a solo run. This multi-pane view shows Ethereum's structural defense. Buyers have successfully held the golden pocket support zone, anchored firmly between 2150 and 2250. By holding this floor, Ethereum maintains an active inverse head and shoulders pattern, targeting overhead resistance at exactly $2,430. Solana follows the exact same geometry. It recently validated a structural floor with a clean bounce off $81.50, putting it on a direct collision course with resistance between $85 and $86. We see mirrored consolidation floors supporting the rest of the market, with XRP defending $1.30 and Chainlink resting tightly between $7.90 and $8.50. The entire altcoin ecosystem is operating as a high beta proxy. Its success is fully reliant on Bitcoin executing the liquidity sweeps dictated by the S&P 500. Pulling all of these data streams together presents a cohesive, albeit conflicting model of the market. The contradiction is severe. The weekly macro charts demand caution due to long-term divergence, while the daily micro charts demand aggression based on equity momentum. Sophisticated capital always trades the reality of immediate liquidity over the theory of long-term indicators. While the macro bearish trend is subordinated right now, it must not be forgotten. If traditional equities falter and reverse, that macro divergence will immediately reassert control over crypto assets. Navigating current price action requires executing trades in the micro time frame, while keeping one eye firmly fixed on the traditional equity ticker. The ultimate directional bias for the digital asset space remains bullish, provided the S&P 500 sustains its trajectory toward absolute record highs. Your immediate operational trigger is tracking Bitcoin to see if it successfully sweeps the 73,800 upside liquidity target. But the absolute invalidation level for the macro resistance stands clearly at 76,000. Clearing 76,000 confirms the move into the $86,000 macroeconomic regime. True structural alpha in cryptocurrency today does not originate on the blockchain. It is engineered entirely by the momentum of traditional finance. Execute accordingly. We will see you next time on Whale Radar.